Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at potential hotspots in the markets today. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Mr. Brian Caprice. Before Brian and I jump into it and take a quick look, I do need to share this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your educational benefit. All right, so what is it that's going on today? And Brian, we're just going to kind of do a quick one today. I know we've got a big event all day today that we still need to finish getting ready for. But we did just have our retail sales. The U.S. retail sales came in. They came in much worse than expected for February. The catch is that I think everyone was expecting it, even though the forecast was down 0.1% and it came in down 2.5 or 3%. I mean, it's certainly not good, but I think everything is just shrugging it off. I think everyone expected it to be worse, and I think everyone's actually looking ahead to, hey, maybe there's a light at the end of the tunnel with this pandemic, and I think more people are interested to see what the Fed might do tomorrow. But right now, we're seeing, pretty much a non-reaction in the markets. And let's just take a look. We'll take a look at the indices and the gold. And
here's why. It's also considered a split number. And this is one of those things that throws people off a lot of times. If you can see last time, February 17th, core retail sales came in at 5.9%. Well, yes, we were down 2.7%, but they had to adjust that 5.9 up to an 8.3. So, yeah, it came in two worse, but then they increased last time by two higher. So it's kind of a wash for a lot of traders, and both core and retail both did the same exact thing in there. So it's kind of a very, very hard release. And again, what I would say is we'll probably see a little bit of movement, and we're not really seeing a ton right now. We're seeing more dollar strength than anything else. But all eyes are now rolling forward and looking at FOMC. And actually, FOMC is tomorrow. There's already in the hottest news over here there's 3 of the 5 already talking about FOMC, particularly this one. Talking about this is going to be the biggest test for Jay Powell, that they're plotting a new dot point, and it looks like it's going to be more hawkish, which again is more dollar strength. And they're starting to talk about a couple big things about, what is moderate overshooting on inflation? Will we prolong the relief? Will we continue to constrain long bonds? And will we try to move the EFFR back to the middle of the curve? So, yeah, all the news is already starting to shift to FOMC, and that's probably why we're seeing really not too much movement with the dollar right now. And really it's dollar strength, but as soon as you hear hawkish, that's raising interest rates or when we could do it. Again, that is a dollar strength based tool. And even overall, looking at a broad picture of the world economy right now, in 24 hours, there's really not a whole lot of movement. The pound is about the only thing showing a bit of weakness right now versus the dollar, the euro, and the yen. But besides that, everything is basically more or less flat. So, yeah, it looks like all eyes have already shifted till tomorrow afternoon. So,
right. Let's just take a look at. I'm thinking maybe the Nasdaq and maybe gold.
Yeah, the Nasdaq. So that was one that we were watching yesterday that we mentioned, and we talked about we had this level at 13,013 and 12,990, and we talked about it. We warned on a 15-minute chart down here. We said, hey, listen, it's been here a few times, and I drew a bunch of arrows. We touched here, touched here, touched here. That this was really number 4 going through, and it did. It did exactly what we said it did. It went through, it based, it pulled back, and then it launched higher. Now, we mentioned it potentially turning around at this next level. It ended up doing the same exact thing. Now, it punched. It was hit number 2. So, again, we don't typically see that. But, again, you always got to be flexible on your feet. It punched, it based, it came back, and what did it do? It used that as the takeoff point for another rally even higher. And interestingly enough, it did go back up to the highest level that we had marking up here that we talked about being a short at 13,169. And again, that's where the kind of this really big rollover point happened. And that ended up being the point where it ended up hitting. And this was, again, strangely enough, Europeans are really getting into the U.S. indices because it was right at 315 this morning when it tagged that level and then shot all the way back down until 13,089. Now, we've hit that level again. Again, I do really love the formation of that candle up top. The way that formed, that's the ideal candle situation for me to take additional shorts. But with the news today, I would say be a bit cautious about taking this one short. Yeah, the number was negative, but it was also positive at the same time. Again, any news about Powell or leaks of raising the interest rates will also hurt the NQ. But I would say at this point, people are getting their stimulus checks. I know tomorrow I got a blanket email from PNC because that's who I use. They said, hey, people will start seeing, things hitting your account tomorrow. Just be aware that, the PNC warning mentions. But it was, a blanket message out there that people will start seeing money. That could be enough catalyst for people to send this over. The average retail trader who's not in the know is not going to know what FOMC is. But what I would say is if we see a same type of pattern, a push above this level, a base and a pullback, that could be a potential launching point for this one to get up
higher.
Yeah. I mean, we're in an area of sellers, but let me bring it up to a 30-minute so everybody can see it a little bit better. This is what we're dealing with, right? We know that we don't have we should be clear until about that level anyway, and that's at 13,190. And then after that, we're kind of flirting up top about 13,210-ish. And again, bringing it across, you can see that's already putting us at a 1 to 2 risk to reward ratio, and even the top section here is definitely up around the 1 to 3. So question is, do you want to try to put a top on this thing when we have again, retail sales being down? It kind of hurts the interest rate situation, which is again positive for the NQ and the indices overall.
Right. And again, I do everyone is really looking at what is going to come out tomorrow, and I really don't expect, they sort of broadcast they're not going to touch rates, although really what we're right is the language, right? They language on when they might, and if there's anything in that vein, and we've got no indication that anything is really going to change. They're probably going to be status quo. So again, do you want to really fight this? We can clearly see Nasdaq has been in an uptrend for the past several days, and again, retail sales came in. Yes, they're negative, but I think people really had expected that, and I think people are looking forward, and the markets are forward thinking that the economy is going to start opening up. People are going to start doing things again. The stimulus checks are coming out. People are actually talking about putting them in the market. And so one way to potentially play this, in a limited risk, limited reward way would be to, do this with binary options so that if things, don't go your way, that, that you're protected. God, and I'm just trying to pull this out, but, I wouldn't be surprised to see this, base and go higher, sort of like yesterday. It's sort of a bit much of the same story. So you want to take a quick peek over at gold?
Yeah, I want to look at gold too, just because, again, interest rates obviously goes back into gold because, again, interest rates are used to control inflation. Looking at gold, gold has gotten pretty ugly. I don't know if I can make this big enough for you guys to see it. Probably right there. This is a lot of wick and a lot. Again, you have a lot of wicks, a lot of indecision, then bam, a big, some type of big news for an hour, and then it goes right back to the same kind of thing with a lot of wicks. Like the candle, like the chart, I would call it very furry, right? It's got a lot of hair coming off these wicks, and again, look at retail sales is one of the big 5 numbers, and all we saw for the last hour and a half is literally chopping back and forth. Now, it is hitting a level. We know sellers have stepped in here. We talked about it yesterday up here at 1735 to 1742. I think when we had that on an hourly, we do that one on an hourly. We knew that was a level, right? We saw that there was levels coming in, and we're butting up against it. But at this point, it's kind of channeling. It's kind of confused, I would say, at this point. And again, retail sales being down more than expected. It's kind of an interesting scenario because, if retail sales was great, that's where, again, they start to get hawkish and talk about raising interest rates. But if retail sales is down, we're not selling things, that means that that kind of hurts inflation, which, again, is kind of a negative factor on gold. And, again, we're hitting a level right now. We see that they're, move this to the side. You can see this little, I've drawn this a few times here, kind of one down here as well. But, when we have levels like this, you got to watch out for the sellers that are sitting in there. And if you're looking for kind of a short-term entry here for gold, you got something kind of sitting right there. And does it have the room to run? I would say probably, right? Let's see. Bring it in there real quick. Right to there. Yeah, we got room to run on this one. We got down till about there. There's your 1 to 3. So, gold, gold's in a situation now where it's kind of like, hey, listen, we're not really seeing inflationary factors. Retail sales is going down. The prior adjustment is great. But if, if they're not raising interest rates, who knows at this point, right? So I mean, if anything today, I would say that gold's going to have an issue, kind of, pushing through these sellers here. And could we see a potential roll and a retest of the same level here at 1722? We could, sure. There may be a little bit of a hiccup over here at 1726, but I was going to say, as a gold trader today, they're looking at this going, huh, what the heck do we do with this, right?
Yeah.
No clear trend.
Right. And I really want to kind of show this. I love the term hairy. And when you take a look at this chart, and I'm trying to get in as close as I can.
You can't really see it because of the resolution, right?
Right. But the point is, I mean, these are 15-minute candles, and these wicks are all over the place. I mean, if you can kind of see this, I mean, it just goes to show the markets are a bit thin. They're very whippy. I mean, in 15 minutes, if it's moving all over the place, there really is. There's not a lot of conviction one way or the other. I like that analogy, hairy. It looks hairy because there's and I wish I could. You could, if you look close. I mean, if can I even get closer or spread this out? You could kind of get a better glimpse at how there are just wicks everywhere. So I'm just trying to bring that in so people can kind of see it. It just goes to show that there really isn't a lot of conviction one way or the other. And so when that's happening,
if you want to flip it back too, I can actually show that to you. I put volume back on the chart so you guys can see it. It's interesting. You're right. In looking at this, you can see that on the left-hand side here, I mean, these are the typical morning time frames, right? I don't know if it's going to let me draw it, but yeah, you can see from here to here, bunch of volume, right? And then same thing, you can see that here's the build-up for the European session, right? And then we have the U.S. session here, right? A lot of volume, right? And you can see it again, one more over here. But then look at today's. Today's, it was just this with this. And again, retail sales is one of those big numbers. And then obviously we get the spike, but it's a much smaller, it's a single candle spike versus the build-up that we're seeing in anticipation for morning trading / news. Right. So very interesting that something as big as retail sales is not as big, not as traded as much for gold. So again, thin morning, it means that all eyes are really starting to roll across to what Powell is going to say tomorrow. So it should be some fireworks if traders are holding their positions.
Yeah. And again, tomorrow it's not going to be so much. I don't think there's going to be any surprises in changing of rates.
No, it won't be a rate change now.
Everyone's paying attention to the language. All right. With that, if you got any questions, quiet day in the markets. People shrugging off retail sales. Eyes ahead for what the Fed's going to say, not necessarily what they're going to do. And that's just gold, very thin, and anticipating that traders are shrugging off any negative news and still looking for reasons to potentially spend their stimulus on equities. You got any questions for Nadex? Email us, please. customerservice@nadex.com. Brian is also very accessible. You can email him, support@keeptradingsimple.com. So yeah, just be careful today. Don't know how the market's going to be moving around. People just shrugging off the news. Eyes looking ahead. We've got our big How to Be a Day Trader at Nadex event. I mean, with the thousands and thousands of people, new folks coming into Nadex markets. It's going to be a busy day that we got ahead for us.
And I'll be on at 3.
And yeah, please.
3 o'clock.
Yeah, take a look and join the sessions that are interesting to you. We're recording all of it, so you'll be able to catch it on demand either way. With that, want to wish you all good luck in the markets, and we will catch you later. Thanks, everyone.